The markets start off strong, but then crash and burn by day's end. My name's Des here at Grok Trade, and it is Tuesday, July 29th, 2014. Markets end the day mixed with the Russells up a fair amount, not by much, but everybody else in bearish territory. Let's take a look at this. Everybody down. You'll see that the S&P and Dow down the most. However, NASDAQ and Russell's doing the best out of today. So that tells me there's a bullish bias going into tomorrow after today's drop off, especially with the banks being in positive territory. However, the VIX increased by nearly 6%. That's a big pop here on the fear indicator. Gold and silver both off. Now, US dollar was up. That put pressure on the markets. Taking a look here at the S&P 500, let's talk about the quantity that we have here. Even though you had small caps and NASDAQ, Twitter came out, beat EPS, earnings per share, by just 2 cents, and it really did exceptionally well today. It's all about the earnings per share. It's all about profitability, and that's something that we teach in our 201 courses. Very, very powerful. But anyway, take a look here. We have the rising wedge, bearish divergence on the MACD. We've been finding support above the 20-day moving average. We had the rolling over effect. We started dropping. We crashed down. When we did crash down between this, below this trend line and this trend line, it was very dangerous. I even posted an image on Facebook. A lot of you guys saw that. Matter of fact, we're knocking on the door almost 6,000 viewers and followers on Facebook. It's insane. Anyway, I posted that warning with a big red candlestick down there, but by day's end, it rallied back. We did a video on that saying it saved itself. It really did well. I expected to see a white candlestick or a green candlestick going in today. Today, it started off that way. We opened up, went higher, 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 all looked like it was going to plan. Technically speaking, everything was in line. We came up here to this previous high area, found resistance, and retraced from there, breaking back down below this trend line, and this went in, not coming back, closing at the day's low. Ouch. So that is a bearish bear sentiment going into the close, even though you had NASDAQ and small caps faring fairly well, and the financials doing okay. This tells us that the markets are in imminent danger because this is the first close we got below this trend line in some time. That trend line was drawn by two areas. You can draw it yourself. Go back here to April 11, 2014. So April 11 to right here, May 21st. May 21st. We find it again right here at July 17th. And we broke it. So this is the first time we broke it. This is a crack in the ice. This is the danger. This is problematic. Up here in the northern states, we get ice on the lakes here. And if the ice starts to break, obviously that's trouble. Bad things are below. So if the markets continue south here, especially if we get below this area, oh man, if we get below the 1967 and close below that 1967 mark, that's going to be problematic. And look for this as being a short-term high. I see nothing but downside potential here if the next candlestick especially goes red on us. If you look here at a weekly chart, here we have this big, nice-looking bullish pennant. I'm going to draw this in here. I mean, this is a nice looking pennant here, and if this is bullish, so I'm seeing if we go lower here and we start breaking down these new areas, that's going to be a problem. I'm going to see a multi-week sell-off right here, and for the month, I can see this being a red candlestick and maybe a multi-month drop. Wow! And to put that in perspective, that would be down here in the 1800 mark on the S&P. To put that in perspective on the daily, that means we're going to have a drop that would put us, wow, down here at 1800. Then the last time we were at 1800 was, wow, back here February to, at the beginning of the year. So that's looking at that. Here's gold for you, chopping around, nothing. Silver, chopping around, just nothing. Going to the tech stocks, wow, Facebook lost 1.6%. I love this pullback here to a support line. This could be a buy opportunity if the markets do decide to go bullish. GoPro, which I'm holding, was up, what is it, 1.9%. And let's see, what else do I want to bring up? LinkedIn, up, and away. It's still climbing higher. Wish I still owned it. Do not. Twitter, though, up 1.7%. Making a nice little pop here today. Here, let's go to a 1-minute chart. We're at $52. Here, we're going to 52 to go back to a daily. 52 puts us right here. So if the markets stay like they are, we're going to have a gap up right here going into the open tomorrow. Very, very interesting to see such a big rally here on Twitter. Makes me go look. Am I holding it? I am not holding Twitter right now. Unfortunately, that would have been a nice Merry Christmas to me. Anyway, a lot of you need to learn how to hedge. This is actually the time to hedge because the markets do start to roll over. You need to protect your capital. Again, we broke the trend line here. Go check out the site, teachmetohedge.com. It'll teach you everything you need to know on hedging. I might as well show you this too. I brought up the 201s. If you want to learn more about fundamental analysis, you can go here, go to premium products, click on 201s, get signed up, and we will throw in a coach, a trading coach for you free of charge. Take care. Safe trading to you.